Alrighty, y'all. Welcome back to the Tao of Investing. My name is Daniel, and one of y'all had mentioned that you wanted to look more into niche ways of investing. And I found a couple. I'm just going to do a quick overview of one, and if y'all want more of these, let me know. I'm going to have a full series on my locals page. Feel free to go over there and check that out. Now, one of the more niche markets, which a lot of people don't really look at, which is kind of surprising to be honest with you, is farmland. And here's 5 ways to actually invest in farmland. Okay? Now, I'm not going to go into them too deep, but here's just a brief overview. Number 1, owning the land directly. Okay, it's probably the easiest way to do it. There are certain tax brackets, certain revenue streams, certain tax breaks, and certain supplements you can get depending on where you live if you own farmland. Now, the capital needed to buy farmland, because depending on where you live depends on how much acreage they deem as farmland. It can be quite pricey. Another way is farmlands REITs, or real estate investment trusts. Now, a lot of these have been set up, for offices, buildings, apartment complexes, things like that. But there are also ways to use that to invest in farm land. So you basically get a percentage of how profitable the farmland is. Usually it is a great aid to the farmer, and you're able to reap all the benefits without having to deal with the management and all that stuff. I won't call it a passive source of income, but it's pretty damn close. Another one is agricultural stocks. Now, instead of investing in farmland directly, you buy stocks in agricultural companies because they own farmland, which is, a really great way to make money. But also, let's not forget, you can invest in companies like fertilizer, seed companies, tractor companies. So anything going into farming is another way to be part of that niche market. The 4th one is farmland mutual funds and ETFs. Now, you can buy stocks like we had spoken of earlier, but investing in something like a mutual fund or an exchange-traded fund is often easier. Some mutual funds have a farming focus, pooling investor money into activities that support the agricultural industry. Now, one important note for this one, for the farmland mutual funds and ETFs, one important note is that farmland mutual funds don't always invest exclusively in agriculture, but often invest in adjacent sectors. So keep that in mind if you want to stay just with farmland, or you want a more diversified portfolio. The 5th one and final one we'll look at is farmland crowdfunding. Now, it allows you to buy a small slice of a real farm excuse me, at a discounted minimum investment. It's almost like buying part or partnership in an oil field or an oil platform, which I'm going to get into one of those later. Now, you can do so. There are platforms like Acre Trader, Farm Together, Farm Funder, and yes, they generally handle everything for you, but some of them have minimum buy-ins. So, for example, Farm Trader tends to start with a minimal additional or initial investment between $15,000 to $40,000. Now, the holding period, because it is an actual farmland and you're owning that farmland, it can be at least 3 to 5 years. So this is a really, really long-term investment. Just to say, okay? You may be able to sell your shares sooner, but that depends on the agreement you have. So these are some niche ways to invest in farmland. If you like this series, I'm going to keep doing it for a couple of different things. If you like it, I'll keep going. But let me know in the comment section down below. Did you know of any of these? Is this new to you? Is there another kind of niche market you would like me to dive into and do a bit more of a deep dive? This has been the Tao of Investing, and I'll see y'all in the next one.